George, earlier on we spoke to the Nobel laureate Paul Krugman. Now, he's worried that the US economy may be heading into a recession in the near term. Take a listen.
Let's put it this way, our current Treasury Secretary is no Hank Paulson. So I think we're in much worse shape. Now, we probably don't have a crisis of that magnitude about to hit us. God help us if we do. But we're much worse shape to deal with whatever shocks do come along than we were 10 years ago.
George, the New York Fed has an economic model, a recession indicator, and it's pretty good at predicting a recession coming down the pike towards us. We can put the chart up, which we can show everybody here, 51.55 on the Bloomberg, and we're getting to the kinds of levels that start to predict a recession. Is a recession in the US a near-term risk?
You know, it's clearly a near-term risk. If we can't get trade negotiations resolved favorably, we've got weakening investment to look forward to. I mean, there's going to be a problem. And given the political issues in the United States, there seems to be very little appetite to get anything done. So it'll be hard to get fiscal expansions, whether it be on an infrastructure basis or otherwise, tax cuts, et cetera, to happen. That's going to be unlikely. So with that kind of uncertainty happening over the economy, recession risks are going to elevate. If you get trade, as I talked about earlier, if you get trade resolved, then you can start to see those risks diminish. I think what Paul Krugman was talking about, and certainly Professor Krugman knows a lot about this, but what he was talking about was the fact that there's less central bank ammunition to fight off any sort of recession or financial crisis than we had in 2008. And I think he's right with respect to that. We started off from higher rates. We had, we didn't have the level of balance sheet size at the central bank level as we do now. But on the other hand, I think a lot of the actual economy outside of that is in much healthier shape. So I'm less worried about a fundamentally oriented recession. Balance sheets at corporates are much stronger. Household balance sheets are extraordinarily strong. Employment is at historically high levels. The actual fundamental elements of the economy are good. If we have a recession, it won't be like 2008, in my opinion, at all. The financial system is much better. Capital positions are better. You don't have the kind of leverage that we've had back then. But if we don't get trade resolved, you will see disruptions. You may very well see a recession over the next couple of years, and I think that's a risk that we all have to be attentive to.